Well, welcome everyone, and thank you for joining us today for our roundtable. Today's topic is the hardwood market trends, and I know that this is a hot topic for everybody. We have a lot of good attendees, so thanks for joining us. Our speaker is Judd Johnson. He's with the Hardwood Market Report. He's going to present. While he's presenting, if you have questions, you can add them over on your right. There's a Q&A tab that you'll see. So feel free to post questions there while he's presenting, and then I'll read those questions afterward. Also afterward, he's going to present for about 30 minutes or so, and then we're going to go back to the lounge where we're going to have some roundtable discussions about the topic. And so you can also find Judd at a table in the lounge after the presentation if you want to have a more detailed conversation with him about something. And if you are having any problems or anything, you can send a direct chat to either myself or Marge, who's also with the WCMA, and we will try to help you out. So I'm going to kick it over to Judd, and go ahead.
Thank you, Amy, and thank you all for allowing me to join you today. So good afternoon or morning, wherever you happen to be. I was asked to speak to you today about U.S. hardwood market trends. But what I'm really going to talk about are the impacts that changing market trends have had on U.S. hardwood sawmill production and hardwood supplies. I just couldn't fit all that on this slide. So, and I've got to get used to this tool too, so thank you for your patience. In the 1970s, Avery Schreiber delivered the Doritos tagline that said, "Munch all you want, we'll make more." Now, some of you are younger than me, think it's Jay Leno that said, "Crunch all you want, we'll make more." But Leno was in the 80s, Schreiber was in the 70s, and speaking from experience, nobody in the 70s had the crunchies. All of that said, much more make more is capitalism at its finest, which means that had we all much less, Frito-Lay's would have made less. So such is the U.S. hardwood industry. Much more make more, much less make less. This is what that looks like for the U.S. hardwood industry over what's now the 62 years of this data. Reading the graph from left to right, you see production responding to market cycles, economic events, and fundamental changes. Between the two red vertical lines that you see, we get an impression of how the baby boom generation affected demand for U.S. hardwoods. Each stage of growth that you see requires additional capital investments for what overwhelmingly are small businesses, and those businesses have a significant economic impact on their communities, which typically are small rural communities. The production downturns that you see affect financial loss to the businesses, and if those losses are prolonged, that's job losses and impacts these rural communities. So this production data that we see here is not benign. It tells us how people's lives have been affected, and it tells us how the hardwood industry is surviving. The stepping off point to this current business era is 1999. Since then, there have been 5 major setbacks that have materially affected U.S. hardwood sawmill production. The first one was U.S. manufacturing of consumer goods moved offshore. That reached a critical mass in 2000. Most of that moved to China. We had some to Mexico prior to that, but mostly to China and then further in Southeast Asia. The production graph that we saw shows how U.S. hardwood supplies were affected. At the peak in 1999, U.S. hardwood production, let me clarify that, Eastern U.S. hardwood production was 12.6 billion board feet. Next was the Great Recession. We'll talk more about the Great Recession later, but in this single event took out more U.S. hardwood sawmill capacity than any other event before or since then. By the end of the Great Recession, Eastern U.S. hardwood sawmill production had plummeted to a then record low of 5.7 billion board feet. So from 12.6 billion board feet to 5.7 billion board feet in 10 years. The Great Recession hangover. We don't hear about this much, but brilliant minds declared the Great Recession was over in 2009. The hardwood industry missed that memo. Business for U.S. hardwoods, particularly for high-value grade lumber, languished another few years before extreme supply shortages, recovering global economies, and increased consumerism from China in particular re-energized business late in 2012 and in 2013. Those sharply higher prices that you might remember in 2013 were significant to stimulate additional sawmill production moving forward. The fourth major event was the U.S.-China trade war and slower economic growth in China. In my opinion, it's better stated as China's slower economic growth punctuated by the U.S.-China trade war. More lumber manufacturing and processing capacity was lost during this time, but most of the sawmill production decreases came from reduced output, not from reduced capacity. Sorry if I can get this clicked. Thank you. Here we go. And of course, lastly, COVID-19. This immediate and substantial downturn in U.S. hardwood production caused by this pandemic was quite similar to that from the Great Recession. Both of them were global in scale, and they dragged down business for all major market sectors for U.S. hardwoods. That's an important distinction. Hardwood sawmill output rapidly dropped and fell to record lows in 2020. Among those records are the lowest annual output at 5.6 billion board feet, 5 consecutive months in which annual production rates were below 5 billion board feet, and the lowest annual rate for any single month at 4.3 billion board feet. That occurred May 2020. Much less, make less. The blue line in this graph represents annual Eastern hardwood sawmill production in volume. The red line measures the percentage change in production from one year to the next. Shown on the left-hand side of this graph, you'll see a deep downturn in the percentage caused by the Great Recession. At the right-hand side, you'll see another deep dive in production that was caused by the coronavirus pandemic. These sharp production decreases were caused by global events that negatively impact the entire hardwood marketplace. Now, if you look at 2018 and 2019, what you can call the trade war years, Eastern U.S. hardwood sawmill production dropped a combined 8.6%. Now, 8.6% change in business up or down is significant, but it's not crippling. In fact, the biggest loss for sawmills during this time was not production at all. It was lost in value for high-valued grade lumber for key production species. Prices for FAS and one common ash, cherry, and red oak plummeted below the tariff rates levied against each species. That was 20% for ash and cherry, 25% for red oak. This is where the question comes in about China's economy at that time. If the downturn in U.S. hardwood lumber imports by China was just a tariff issue, which is nothing more than money, the U.S. hardwood supplier more than paid for the tariff. Yet the volume of U.S. hardwood lumber imported by China decreased in 2018 and again in 2019. So here's a glimpse of the history of exports to China. U.S. exports of hardwood lumber to China dropped 48% from the end of 2017 to the end of 2019. Actually, exports at the start of second quarter of 2018 were running ahead of the same period in 2017. But the fallout from the trade war and China's economic slowdown actually did begin in May 2018, and it gathered momentum around July of that year. But the U.S.-China tariffs were not implemented until September of 2018. The China downturn was a catalyst to a much greater decline in U.S. hardwood lumber pricing. Pressure spilled into other markets when U.S. exporters attempted to redirect lumber displaced by the China market. There was no other market to absorb the same kind of volume of the same species, grade, and thickness combinations. Consequently, higher valued grade lumber was pushed into lower valued lumber markets. In particular, we saw number one common oak and even first and second oak moving to the oak strip flooring industry, which uses 2 and 3A as a base raw material. Additionally, sawmills produce more industrial timber products at the expense of higher quality material being included in those timbers. This is key: substantial loss of wealth by sawmills and concentration yards. The U.S. hardwood supply grid was in a weakened financial state at the beginning of the COVID-19 pandemic. But there are two other forces that have set back business for U.S. hardwoods, in addition to the five major events that we just discussed, and they're fashion and competition from alternative materials. Here's an example of that. These high fashion kitchen cabinets are devoid of material that we can tell for certain in this picture that there's solid wood included. Yes, these could be maple cabinets, but we can't really tell because the painted finishes mask any identifying characteristics of the species. And since industry people can't tell what these cabinets are made from, the consumers can't tell. So if no one can tell these cabinets are made from maple, why use maple? In fact, why use hardwood lumber at all? Who cares what the platform is if you can't tell what the material is? If you look at the floor in this picture, are we looking at solid wood flooring? Are we looking at engineered flooring? Or are we looking at polyvinyl chloride? You know, that material that they make sewage lines out of, that marketers have somehow been able to reinvent and call luxury vinyl. I think maybe we need to hire those marketers. I've used the term grade lumber and industrial lumber rather loosely so far. Lumber grades can be divided into two basic groups. Grade lumber, which is widely used in appearance applications for consumer goods and is almost always the catalyst for profits for sawmills. Industrial lumber tends to be lower valued. Because of that, grade lumber is particularly critical to the ongoing business for sawmills. But since timber species and qualities are varied, so is sawmill output. Therefore, it's essential sawmill businesses have a proper mix of grade lumber and industrial markets that are both active and performing well. When we think about housing construction and hardwoods, we're thinking about grade lumber that's used in appearance applications for cabinets, flooring, as we just saw, also furniture. Shown in the picture, we couldn't tell what it was, but we know that cabinet is one of the biggest markets for grade hardwood lumber. Now what we see in this graph, it shows us very clearly that less grade lumber is being consumed in the housing market in a situation where prices are rising and sales are rising for houses. Grade lumber consumption actually should be increasing in this market environment, not decreasing in this market environment. Owner-occupied investments in single-family remodeling projects are at record highs, but hardwoods are losing share in the remodeling sector too. The money is at record high. So far this year, it's averaging about $250 billion on an annual basis. That's through May. Indeed, more hardwood volume is going into remodeling projects than before, but the increases in grade hardwood lumber consumption are less than the market expansion from remodeling. So hardwoods have lost market share to competing and often non-wood materials in the remodeling market too. The grade lumber to industrial lumber market makeup was 60% grade lumber as recently as 2005. It's essentially inversed that now. And to be very clear, this is not because of a change in the quality of our timber base. It's a reflection of the marketplace itself. This graph represents reduced profit potential for sawmills and lumber yards. This graph demonstrates real reduction in profits and total revenue. It's measured in volume. The marketplace for U.S. hardwoods has contracted in terms of both volume and value. This slide ought to speak a little louder now. Here's where things stood at the end of 2019. At the start of 2020, the supply side of the U.S. hardwood market had been financially strained. We talked about that. Sawmill production had been forced lower. But in spite of all the challenges experienced up to this point, there was a sense of optimism about business in 2020. The U.S. and China inventories had corrected at that point. China was a bit more active in purchasing lumber in fourth quarter 2019. And toward the end of February 2020, China announced a one-year suspension of tariffs on U.S. hardwoods. And of course, that optimism didn't last very long. But we can't ignore the business conditions in the U.S. have vastly improved from that epic downturn that we experienced a year ago in March through June. As we're here today, there's a clear view of business recovery and economic growth. Sorry. There we go. Here's early evidence of market recovery. In mid-year 2020, the annual rate of hardwood lumber consumption by major U.S. markets was tracking approximately 2 billion board feet below that for 2019. Importantly, all market sectors were affected. However, recovery in the second half of 2020 pulled up consumption for the full year nearly a billion board feet over that at the mid-year. U.S. hardwood sawmill production has been slow to respond to economic and market improvements. Production over the last 3 quarters of 2020 averaged just slightly more than 5 billion board feet. The key to this is not just the sawmill production decreased to historic lows, all that is a critical point. Instead, the number of successive months and quarters in which production languished to record low territory, those are key. It's not exact, but it's not far off either to say that each quarter shown in this graph at extreme low production levels represents a full cycle of processing green 4-quarter oak to a kiln-dried lumber state. The supply void is quite clear. This is Hardwood Market Report's perspective of how supply and demand stacked up at the end of 2020. Just as a matter of explanation, the difference that you see between the supply and demand graph lines represent inventory change. Supply gaps still exist, but after a year, we're finally seeing some progress in recovering sawmill production. And as we understand that supply is a product of demand, we should also understand that price and price movement result from the supply-demand relationship. And perhaps better said, the supply-demand variance influences price change. So just as a Girl Scout troop might be selling its last box of Thin Mint cookies outside a Weight Watchers meeting hall or outside my front door, lumber prices have been impacted by limited supply and high demand. Here we see hard maple prices have gone vertical. HMR price for #1 common is above a 25-year average and is still moving up. The FAS price has far surpassed the 25-year average, also still rising. We have record high prices set and reset by soft maple. Walnut. Walnut's a minor growing stock in terms of volume and is under heavy demand pressure in both log form and lumber form. China is a big player for walnut lumber and logs, but the US and Europe are also big players for this species as well. Much of the price pressure on white oak lumber actually stems from intense competition for large, high-quality logs by stave mills and veneer mills. The quality of white oak log affordable to the average sawmill does not yield a high percentage of first and seconds. Therefore, supplies are limited regardless of demand intensity. Poplar should be one of the first species to show signs of supply improvement as overall sawmill production increases and supplies of competing raw materials improve, such as MDF. Poplar growing stocks are prolific and fast to regenerate. The production from logs to kiln-dried lumber is a matter of weeks for poplar, regardless of the time of year. Of course, the time required for oak can be months, even during optimal drying seasons, such as right now. I've got 2 comments about ash in the marketplace. Emerald ash borer is eradicating live ash trees throughout the eastern U.S. hardwood forests. That's going to continue. Some mills are actually exporting ash logs instead of processing them in the lumber because they're not certain if they can accumulate enough volume for timely, efficient production runs. The second point is business for this species is strongly influenced by China, the emerald ash borer notwithstanding. I'm sorry, I've gone one too far. Here we have cherry prices. The cherry was a very popular species in the United States during the housing market boom that lasted until about 2005. Fashion changed about that time, but along came China. Red color species are popular in China. But the problem with cherry business being China-centric is the vulnerability that comes with the inconsistencies in the China marketplace. Now, this is the image I want us all to look at very closely. This highlights the fundamental market shift that has negatively affected business for U.S. hardwoods. The U.S. is overly dependent on China for sales of high-grade red oak lumber. What makes this so critical is that red oak is the most prolific production species growing in eastern U.S. hardwood forests. So, if you focus your attention on the right-hand half of this graph, think about this. How does a sawmill business prepare for this much volatility in the marketplace when purchased timber inventory can project out as much as a couple of years? The success for this one species and for the U.S. hardwood industry as a whole depends on a broader, more reliant market outlets than what we currently have. Just wanted to provide some side-by-side comparisons. On the left-hand side, we have ash, which in recent years has become more China-centric than what it was previously. On the right, we have hard maple that is mostly a domestic U.S. and Canada species. Similar circumstances again here. We see cherry again matched up against poplar. Poplar was what I considered was an undervalued species until after the Great Recession. The Great Recession took out a lot of sawmill production, and it changed poplar production, where we used to have sawmills and sawmill companies that would have production runs of 1 million feet or more at the sawmill level. That's changed dramatically. So we saw the prices increase after 2012, 2013. At the far right, what we're seeing now is an effect of COVID. It's an effect of shipping. It's an effect of labor. Everything is involved with inflation right now. But poplar should be a fairly stable price species when things do settle back down again. And of course, this is my poster child of volatility. Red oak, number one common, and first and second's red oak, compared to white oak, as we see that has gained in pricing strength moderately up until recently when prices have shot up. Notably, prices for these China-centric species only occur after a prolonged downturn or a sharp decrease in price that actually reduces supplies. No one wins in this erratic behavior, not the sawmill, not the buyer, and not even people that buy lumber that aren't China-centric species, because your supply base has been disrupted by this. So to reduce the excessive dependency on China market, the U.S. hardwood industry must expand business elsewhere. It's just that simple. And the most obvious thing that we can do is we should actively participate in the growing U.S. housing market and economy. The millennial generation and the Generation Z are increasing in age and influence. Together, they're over half of the U.S. population. The U.S. hardwood industry has a tremendous message that our products that we manufacture are economically, environmentally, and socially benefit. This story needs to be shared. However, it's a hollow message unless we demonstrate to consumers the full value of hardwood purchases. Otherwise, we may miss this opportunity. The good news, of course, is the recent launch of a Real American Hardwood Promotion Initiative. This is the first legitimate promotion effort formed by a coalition of most hardwood industry sectors. The obvious question is, will it work? Well, it's far too early for anyone to say at this point. On the other hand, this presentation has just shown what to expect if the hardwood industry continues to do nothing to reach its customers. Thank you for your time, and I'm happy to address any questions you've got about the material that we covered and anything that we didn't cover. So, Amy, I'll turn it back over to you.
Okay, thank you, Judd, and thank you for bringing up the Real American Hardwood Coalition. As I said to you earlier, I am a board member of that group, and we're excited to have so many associations banding together to start, trying to hit our consumers and like you said, explain the benefits and try to move the needle a little bit. So Phil has a question. He asks, as ash becomes less available to China, do you anticipate oak filling the void due to similar characteristics?
I'm sorry. Could you repeat that question, Amy?
You should be able to see it on the screen now.
Okay, as ash become less available to China, that's a terrific question. If we look at the history of the U.S. furniture industry, it really does have its full history is it has chased cheap labor and cheap lumber. And having been in the industry, I saw where oak became popular. It would start with red oak. Prices would move up on red oak. They would switch to white oak. Prices would move up. Then they would switch to ash. And then they would switch to hackberry. And by that time, prices on red oak had cooled off. So it was very circular. And so ash is indeed uh, a logical replacement for red oak and vice versa. So being a wide grain species, I think that should help red oak as ash supplies decrease. Um, Ash is a nice blonde look. If they want a light color, there are treatments that you can do to red oak. You can bleach red oak, and it will be a light color too, a white color too. So I think there's an opportunity there. Yes.
Great. Thank you. Next question is from David, and he asks, when do you anticipate prices to go down?
Oh,
This is the question that everybody wants to know.
Everybody knows.
About your crystal ball.
What day will that happen?
Right.
Well, I will agree. I will agree that immediately that we will see price adjustments, and we're actually already seeing some price adjustments. And those items that we're seeing are exactly what you would expect. Those items that are China centric. Several things have happened. We've seen sawmill production increase slightly. The other thing that's happened that we sort of forget about, unless you're involved in that business, is the drying time has increased for lumber. So if we go back to January and February, your kiln drying schedules were prolonged. You had lumber in front of the kilns that just weren't ready to run in. They weren't below fiber saturation point. So today they are. A good example, a sawmill company I was talking to last week said his sawmill production this year is up 10%, but his dry kiln production is up over 30%. So what's coming out through his kilns is more volume. So his customers, now that he has more kiln dried lumber to offer, may feel like there's more supply. And on the kiln dried side, there is. But his kilns are outpacing his sawmill production. That if that continues when we move into winter, then he'll start seeing a gap again. So China, this is summer. Also, this is summer. Typically, summer is slow everywhere in the world. It is in China too. So I think China's holding back. We're seeing some accumulations, 4/4, first and seconds red oak. Some of those high prices that we saw are beginning to back off there. Cherry is so China centric. We're seeing some pressure there. It's beginning to adjust. But what it's going to take is an increase in supply, not just an increase in hardwood supply. We're going to need to see an increase in softwood supply, and we're going to need to see an increase in plywood. We're going to need to see an increase in MDF, those other materials that compete against hardwoods. Poplar's a great example. Currently, there is, I'm going to throw a number out there, and it's just a guess, 25% of Eastern U.S. hardwood sawmill production capacity utilization is dedicated to softwoods. There are places in the South, I know there's some large sawmills that are 100% softwoods. They're not efficient softwood sawmills. So when we see softwood production increase enough and those margins on softwood shrink, we're going to see those sawmills turn back to hardwoods. We're going to see that production increase. But we're also going to see more pine lumber available that's going to go into molding and millwork that's painted that poplar is currently going into. So therefore, that'll be increased competition. Same way with MDF. We'll see MDF competing against that. In the furniture frame build, upholster business, there's been a shift to hardwood frames, and it's not because to increase the quality, it's because the plywood wasn't there to fulfill the demand. As plywood increases, we'll see that shift back again. So it's it's not just a straight line. This is a highly complex industry, but it's not a very complicated industry. It really is a supply and demand situation. So I would suggest keep your eye on softwood production. Look at softwood prices, what's going on there. We saw those prices drop down. They've bounced back up a little bit, $600-700, I think is what futures are. I think the Goldman Sachs people think that it'll end somewhere in the $600 to $700 range this year. Keep your eye open on that. Keep your eye open on sheet stock inventory, as well as hardwood production, which we try to report on a monthly basis. Those will be telltale signs of how supplies are transitioning.
Great, thank you. All right, the next question is from Spencer, and he asks if you foresee poplar prices settling down and staying there.
Boy, I'm not going to say stay there forever. Yes, poplar is a high production species. It's one that from the time it goes through a saw at a sawmill till it's kiln dried that happens in a matter of weeks. So it's a high production species through a sawmill. Everything about it is fast. So it's one of the species that I expect to recover pretty quickly. We knew the China centric species and items would probably be the first to show recovery and price adjustment down. But I think poplar is one that we'll see that, and poplar has a long history of being stable in price. I do think the price points on poplar are going to be at a higher level going forward than they were before the Great Recession. And as I said in the conversation earlier, there were sawmills in the Appalachian region that I knew that literally, if they didn't have 1 million feet of logs for a production run, they didn't run poplar. So at that time, they would cut 4 through 16 quarter. If you wanted to buy 16 quarter first and seconds poplar, you could do that because they had enough volume at one time to do that. That's not the case today. When they cut thicker stocks, it tends to sell as a 2 and better product. You have to sort through it. So if what you're making has to come from first and seconds, if it's really heavy stock, I anticipate those to be some pretty high priced items because of that. That's a fundamental shift that's happened in the marketplace. So I do think we'll see adjustments from where we are, but I wouldn't go back before the pre-Great Recession era.
Great, thank you. All right, the next question is for me about the Real American Hardwood Promotion Coalition and what the best talking points are to highlight hardwood products to the younger generation. And we were really quite surprised by the research results. We thought that sustainability and that messaging was going to be a powerful message to the younger generation, and we found that it is not. It's important, but it's not as high as value, durability, and cost. If you walk into a Home Depot right now and you look at the luxury vinyl plank flooring, they really are selling on waterproof, durability, et cetera, et cetera. So we need to first hit our audience at an emotional level and say, kind of, here's the reasoning why hardwood is preferred, and then get the messaging out about the durability, that it is actually, it lasts generations. A hardwood floor can be refinished easily, things like that. They already like the appearance. The appearance is what everybody's aspiring to. That's why there's so many fake products that look like wood, because people like the look of it. They like the the warmth and the charm of it, but they're really kind of comparing cost and So like I said, I think what we're planning on doing is hitting it at an emotional level of messaging around this is healthy for your home. That is a message that does move the needle for them. They are more conscious about the health of their homes. So that's a good message. And then, like I said, durability and value. They don't really connect durability and value the way that they should. But so that's what our messaging is going to be for that audience. Thank you for asking. The next question is from Ken. And he says, I would assume the prices in the presentation do not include freight. Freight has become a much bigger factor in the final cost of lumber. Will transportation stabilize anytime soon?
Great question, Ken. I'll share with you a personal story. My mother told me when I was a young teenager that timing was everything, and I had bad timing. So I was thinking this past winter, I was thinking that we would see some sort of stabilization or flattening out in the transportation sector, and obviously we have not. Since then we've seen from China major ports shut down because of COVID outbreak. This week, there's a typhoon hit Ningbo in Shanghai, created more disruptions. And what I'm reading and hearing from people in the transportation sector is there's they don't see anything immediately happening. And yes, you're right. The prices that we publish are reduced to the producer level or the shipper's level. And yes, freight is increasing, and not only just the cost of freight, but in order for some people to buy the lumber that they need, they're having to expand their supply area. We see this especially on the green lumber side. So not only are you paying more per mile, you're having to go further away than what you would otherwise. So it's compounded. I don't see a quick fix to this.
Great. Okay, I don't see any other questions. Like I said, we are going to now go into the lounge, and you can sit at a table and have discussions with each other. So that's a great way to just talk about what you're finding and share, network a little bit. Before we do that, I'm going to just throw a quick poll up on the screen. If you could answer about a topic for upcoming roundtable events like this one. Just choose one, and that will help us planning in the future. All right, great. Thank you. Okay, so now I'm going to end this session, and like I said, you will be back in the lounge. If you haven't been in the lounge yet and don't quite know how it works, you'll see some tables. Just click on a chair at any of the tables, and you'll be joined by others, and it's kind of like a private Zoom room, so you can interact that way. So thank you all for joining us, and we'll see you next time.
Thank you.